there, I thought I would share with you what's going on in the Toronto residential resale market for the month of May. May saw 18,612 new listings, which was a 21% increase year over year, and a 9.8% increase month over month. While this aligns with the 10-year average, sales activity did not follow suit. There were 7,013 sales in May 2024, which was down 21.7% year over year and 1.3% month over month. This discrepancy suggests that buyers are hesitating and sellers are holding firm on their prices. Perhaps they're waiting for interest rate cuts, or there's overall market uncertainty. It also suggests that there's more sellers entering the market at the moment than buyers, which could indicate fewer sales for the near future. June is going to be a very interesting month because the inventory is there. And on the surface, the numbers look kind of grim. However, it's crucial to remember that last May was actually the peak of 2023. But this May, buyers seem to have more of a wait and see kind of approach, perhaps waiting for the June rate cut and hopefully more rate cuts in the future. The average sales price declined in Toronto from $1.195 million to $1.165 million, driven by lower prices mainly in the 905 region. There seems to be a lag in condominium apartment sales. It's taking them 25 days on average to sell at 99% of asking prices. And that's likely because of affordability issues for first-time buyers. So the Bank of Canada's recent 0.25% rate cut to 4.75% offers slight relief, but significant mortgage rate reductions are unlikely in the short term. Although you can see that the Bank of Canada is forecasting interest rates drop another 50 basis points by the end of 2024. June sales are expected to mirror May's sales, with potential growth in the second half of 2024 if further rate cuts occur. So the average sales to list price ratio is currently 101.5%, marking 4 consecutive months over 100%. We know, as we have seen, that there has been some success with offer dates and some sellers getting multiple bids. However, the question I would pose is whether having a lower list price will set offer dates is yielding a better sale price than a precision pricing with offers anytime. Are properties underselling with this list low strategy? This again suggests that inventory isn't the issue, rather it's how the inventory is priced. And despite sales aligning with long-term averages, the influx of new listings is outpacing sales, leading to a buildup of inventory. This may keep prices flat despite increased sales activity. Again, affordability is a key issue, with Toronto's average household income at $110,000 and sales prices at an average of $1.165 million. That definitely limits market participation. And despite this, demand remains strong, with detached properties selling in 16 days at 101% over ask and semi-detached in 13 days at 106%. This market will give you immediate feedback on your pricing. It's very unforgiving, and you'll know within 2 days of listing whether or not you're priced right. The last time active listings exceeded 20,000 was in May 2019, with an average sale price of $819,000 and a key lending rate of 2%. So for those almost 20% of Canadians who need to renew their mortgage this year, that's an increase of almost 113%. Historically, inventory can drop quickly, as seen in 2019 and 2023, and the summer may absorb some of this inventory as fewer new listings typically come to market. The sales to new listing ratio is at a 10-year low at 41.6%. Pricing is critical in this market. Showing volume has remained consistent throughout May, with an increase towards the end of May, a positive sign for June. There was also a jump in registered offers at the end of May, suggesting higher offer registration for June compared to last year. The Bank of Canada made its first rate cut on June 5th since March 2020, reducing the overnight lending rate by 25 basis points. This marks a significant turning point after 2 years of restrictive policy. Although rate changes typically take 12 to 18 months to impact the market, this cut could boost consumer confidence and sales activity. We're hoping for a rate cut in July, although it's uncertain whether or not it'll be held off until September. Inflation remains above the Bank of Canada's 2% target, but has decreased from its 8% peak in June 2020 to 2.7%. And shelter and gas costs remain high, but lower interest rates will help to ease these shelter costs. In the short term, sales activity still may boost into early summer, with potential price appreciation by year's end. The fall market will be particularly interesting with the possibility of 2 rate cuts by September. Thanks, and if you have any questions at all, please reach out.